Good afternoon, ladies and gentlemen. My name is Andreas Forster. I'm working for GrECo Group. My colleagues are joining also for the breaks afterwards. Brian Alexander, Group Practice Leader, Financial Lines, worked many years as an underwriter, especially underwriting also Ukrainian business. So in the breaks we can exchange some past experience with him. And our local general manager, Alexander Laukart. We have this office here now for 16 years, and now I will start with my presentation because we have only 15 minutes left. My topic is a little bit on operational risk, especially cyber and crime risk, and also, of course, the D&O. Cyber risk is at the moment somehow the buzzword in the insurance industry. Everyone is talking about cyber insurance. Also, the financial service sector is talking a lot about it, and it's highly focused on the risk management people all over the world. There's, for example, I've brought with me Allianz Risk Barometer from 2019, where they make a questionnaire to risk management people all over the world. And you see here, top ranked also for the last year was cyber incidents, then changes in legislation, market development. Another statistics, where does the claims come from or which industry are affected? I've here brought with me the Global Cyber Claims Report 2018 from AIG, where you see the affected industries is, of course, professional service, and number 2 ranked financial services. So they're highly affected in this case, and also to see what happens in that area of cyber insurance. Top ranked is business email comprise. Do not know whether it's readable. Means only phishing mails is one of the top ranked categories of losses in cyber insurances. Second one, ransomware. So we have here the prominent case also where I guess you heard all of it. It's with NotPetya, which affected industry-wide, worldwide businesses, and business interruption were caused. And then third and fourth is data breaches, whether by hackers or by negligent employees. So different phases of claims in the cyber. I will go back to this later on. But besides cyber, I also want to mention the issue of crime insurance for the industry, also for financial services. I've brought with me PwC's Crime and Fraud Statistic 2018. They do the every second year, more or less. And one of these questions to the companies was your company affected in the last 24 months with a crime or fraud incident? And you see here the trend. It's not the trend what I want to mention here, but what you see is that it's always above 30%, now increased up to 49% for the last statistics, which means every second company is affected on a crime cases within the last 24 months, and I think this is a quite high number. What we see, we can now go more in detail on financial service industry, where this fraud comes from. Its highest category is consumer fraud, asset misappropriation is the second one, and then it's computer crime. So you see, computer crime is also heading up there, getting a quite important category, but the classical crime is still very prominent also for the financial services. We've brought also some internal numbers from us and stick together for crime relevant figures out of. The issue is the severity of crime risk is always really high, and the recovery rate is very low, so only 85% are mostly not be able to be recovered. The overall loss on fraud worldwide is mentioned up to 120 billion US dollars, so quite a high number. But the next bullet points are more, and this is some of the issues what really faces every company, but especially in banks where you have a lot of funds transferred and so on. 50% of bank frauds occurred by employees which are more than 5 years in the companies. This is always kind of not the nicest thing where you say, okay, my employees are acting fraudulently, and a third of the committed fraud are committed by the trustworthy management. And this is for the next one, going now deeper in the coverage. We are an insurance broker, insurance consultancy, and therefore what we have to mention, or what we try to assist you, the issue is crime, cyber. You see a lot of overlapping. Cyber is often kind of crime. Also in the insurance coverages there is a lot of overlapping. What we see is at the beginning cyber is a quite new insurance line in the market, but it's really spotted, especially also by the regulator, because the severity is very high. But at the moment we see that most of the higher severity of losses is still in the crime sector, and what works together with all of this is the D&O, because the D&O is the liability insurance for the management and supervisory board, and it's the duty of the management board and supervisory board to have proper procedures within the company for cyber and crime, and also especially for the balance sheet protection, because these cases can really harm the balance sheet of a company. What are the coverages of a classical cyber insurance? Cyber insurance always consists of three main pillars. The one pillar, or the pillar above, or the circle above, is the crisis management, which is not really a classical cover for a loss. It's more assistance service provided by the insurer, which depends on the company or the bank, what you need. This has to be adapted to your special needs. But in cases of a cyber incident, you have a lot of things to do, like legal advice when there's a data breach, forensic investigation, IT services, and so on, monitoring, and also not to forget PR, because the next thing after a loss or a cyber incident is the reputation. Everyone can be having a cyber incident, but the issue is, and the important thing is, how you react on this. And therefore, the crisis management in that case and in cyber incidents is very important. And then, of course, you have these two other pillars concerning really the loss, first-party loss and third-party loss. We see this in first-party loss, extortion, data restoration, and business interruption. And on third-party losses, of course, the liability side, having security and privacy liability or regulatory liability, and fines where they are allowed to be insured. To the other coverage on crime coverage, and therefore it's important to be really here aligned. The classical insurance here for banks is the banker's blanket bond, which is a bundle of coverages which can be adopted on your needs, and where you also can have a lot of elements of a cyber or computer crime coverage inside. It's in principle, it's a coverage for dishonest acts done by employees or third parties with different clauses. The most important clause here is, and this comes back to the statistic I've shown you before, is coverage for a loss sustained by an employee where the bank suffered a loss. And this is also from the statistic wide, and what we have seen is that 70% of all notifications in a blanket bonds determine on the infidelity of employees. And also from the amount wise, it's 90% of the payout amounts are paid out through that clause. D&O and liability insurance, it's also always on the topic for banks, especially international-wise. What I always want to mention on a D&O, or directors and officers liability insurance, it's a liability insurance. A liability insurance has always two components, which is the defense of unjustified claims, like having a legal cost insurance, and settlement of justified claims. These are the two components. The D&O insurance is only, the special thing of a D&O insurance is that it's a insurance for the benefit of a third party, because normally the company is the policy holder and the insured persons are the directors and officers. We have then also side A, B, C coverage, where also the company itself can be insured. But classical-wise, for non-US listed companies, you would only take side E coverage, where the insured person is the director and the officer, board members, and so on, which can be faced third-party claims, or also in some territories, internal claims means first-party claims. And in case of a claim, here we have it in writing, the insurer will pay on behalf of the insured person for a loss arising out of wrongful act done by the insured person. What we have seen in the past, the insured persons are being amended and widening them up. But when you focus on the main purpose of a D&O insurance, it's always more or less the board members and the supervisory board members who are here, have the most liability on that. Some market outlook, market update outlook. What we have seen now in the past 2 years is, okay, the Ukrainian market is always a difficult market, insurance-wise, but internationally seen on financial lines, for example, which is what we see the core lines for banking industry, for crime and cyber. There's a real getting a tough market and hardening market. Depends. We had a quite huge loss ratio. Lloyd's market has to close down some syndicates. We had mergers of big providers of capacity here, meaning CHAP and ACE merged together. ACE, AXA XL merged. So they're reducing capacity. And therefore, especially for big big programs where you need a lot of or more insurers on a program, it's getting harder and harder because capacity is missing and the premiums are increasing. This also has sometimes effects on the wording, which are also going to be more limited here. This was my presentation, short overview. I had only 15 minutes for a really wide topic, but but I'm happy to answer any questions, give you also insights. We have Brian Alexander with us in the breaks, who has a lot of experience, especially in crime covers on the Ukraine market. And if there are any questions, because I have 30 minutes left, 30 seconds left.